As of February 2025, Vietnam's economy exhibits robust growth, driven by increased business activity and sustained foreign investment. Standard Chartered projects a 6.7% expansion for the year, with a stronger performance in the first half at 7.5%, and a moderation to 6.1% in the latter half. This positive outlook is underpinned by the government's focus on bolstering economic growth through low interest rates in the near term. However, rate normalization is anticipated in the second quarter, with the State Bank of Vietnam expected to implement a 50 basis point hike. Key factors influencing monetary policy decisions include inflation dynamics, U.S. Federal Reserve policies, and the performance of the Vietnamese dong. The Vietnamese government has set an ambitious GDP growth target of at least 8% for 2025, up from the previous projection of 6.5 to 7%. To achieve this, comprehensive solutions across all sectors have been outlined in the government's resolution. Inflation rose to 3.6% year-on-year in January 2025, marking the sixth consecutive month below 4%. Inflationary pressures could intensify, driven by rising costs in healthcare, housing, construction materials, and food. Overall, Vietnam's economy is on a positive trajectory in 2025, supported by strong business activity and foreign investment. However, the government and central bank remain vigilant, monitoring inflationary pressures and global economic policies to ensure sustained growth and stability. In additional news, we learned that as of February 2025, Haiti's economic situation remains deeply challenging, characterized by persistent political instability, widespread violence, and severe humanitarian crises. Inflation has remained alarmingly high, with food prices experiencing significant surges. By July 2024, food inflation had reached 30%, leading to a situation where food expenditures now account for up to 70% of total household spending. This surge in prices has exacerbated poverty levels, with over 64% of the population living on less than $3.65 per day. Armed gangs have expanded their control, now dominating approximately 85% of Port-au-Prince. This pervasive violence has led to the displacement of over 1 million people and has severely disrupted economic activities, leading to significant losses in agricultural production and other livelihoods. Investors considering exposure to Haiti's economy would likely find better opportunities in alternative assets such as real estate, infrastructure projects, or agricultural ventures if political stability improves, rather than in the currency itself. In other words, investing in real estate remains a viable investment option, and its benefits outweigh those of investing in the currency itself.